Hi everyone, this is Rob Roy of EWO Options, and welcome to this trade review of a recently closed trade ID number 327. As you can see, it was on symbol U, which is Unity software. It was a long strangle in our volatility strategy. A few things to note about this trade alert is that one, it was in the shorter end of the time frame that it usually takes for a stock to break out. 18 days is pretty on the low end, and then it was in the higher end of our normal profit range, which is 30 to 70% is what we usually make on one of these strangles, and 32 days or so is the average on the breakout time. So pretty good result. The entry was sent out on April 23rd, and here was the chart on Unity. You can see it was a very nice Elliott wave symmetrical triangle. At the end of a move down this point, quite often you'll see these really nice Elliott wave symmetrical triangles at the top after a big move higher. And you can actually see there was one back there in January and February. It even gapped down, so we had that potential to fill that gap if it broke to the upside, and then support if it made a downside break, which is exactly what ended up happening. We did break to the downside. You can see the exit alert was sent out for subscribers, and that's part of our alert service. Is we don't just send out entries, we send out alerts for any adjustments, and we send out alerts on when we're exiting the position so that you can make a decision if you want to follow along with that or not. So here was the chart after a pretty quick break to the downside, and you're going to be able to see that there was a few different pieces of support area there, and we gave it an extra day to see if it might break below that 85 level. It tried, closed higher. The next day we got right back down there, and that's when we chose to go ahead, take the position off and take that gain. So not wanting to let that kind of a profit go away in such a short period of time. Another note about this alert that I wanted to share with you is the fact that the market plays a part in whether or not we have more alerts going out in our impulse portfolio or more alerts going out in our volatility portfolio, which consists mostly of these strangles with triangle patterns. And you can see the market itself has struggled at that 420 level, which was the 161.8% fib extension on the C wave of the zigzag that, if you've heard any of our updates, we've been talking about for months and months. So my point is the market's at a point of indecision. That's a great time to be putting on strangles, and we've had several of them do really well just in the last week or two, and we will be looking there until the market makes its determination on where we go from here. Hope you found that informative. Look forward to talking to you again next time. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.